Going, y'all. So I was gonna get a quick update here today, and not much going on with stuff. So Zim went down pretty good yesterday, which y'all probably seen, and then today it's having a bit of its rebound, so that's pretty good. But I'm still sticking with it, and I've been sitting here thinking about which company I want to put dividends into, which will pretty much be the dividends from Zim, which I'm expecting around 4,000 some change. And I'm still pretty sure I'm going to go with PBR. I've been looking into it a little bit. I kind of have those backwards because PBR is like an oil type company, right? It's not shipping freight stuff the same like what Zim is. So I kind of had that confused. But this is my account right here as of a snapshot, like 6 minutes ago. Yeah, that's what the timestamp says up there. So yeah, still looking pretty good. Zim's still looking pretty good. I still, I anticipate it's going to go up. I know we have the Fed meeting thing coming up Wednesday, so we'll see what happens there. I've been watching some stuff about that. So my thoughts are, with the banks, the bank crisis thing going on, I'm really thinking like, like if another bank wants to simply just buy out these ones that are going down, I think the Fed will, I guess, pause, how people were saying. Do I think I don't even know if they did a bailout yet. I don't know. Like, I guess they did do a bailout maybe, or I have to look into that some more. But I was listening to that a little bit today and yesterday and so forth, and I was thinking like, I'm not quite sure, but I'm either betting. I don't know. What am I thinking? Actually, I'm gonna go ahead and bet with that they might still increase it like 0.25%. That's my guess. Just because I don't think many other people are guessing that, so I'm gonna go ahead and guess with that. Because if people are still borrowing all this money from the banks, right, and the banks are still lending it out, as I said, without any kind of checks at all, the Fed probably wants to stop that because otherwise banks are just going to keep collapsing, and then somebody else will buy them out, or they need to, give the Fed the bill. So, yeah, either a pause or a 0.25% hike. I think I'm going to go with the hike because got to still put a little bit more pain, in my opinion. But that's kind of all I really got on that one. There's a lot of people that talk about that, a lot of good channels out there for that. This is what I'm setting at with my account, my private account, so it's looking pretty good. And PBR is where I'm looking to make my money that the dividend I get from Zim, I'm probably going to drop in there. Just because it's, I've been looking at it, I'll show you what I found. And it pays in May. It won't be nearly as big of a payday as what Zim, did, but still seems like it'd be pretty nice. Coming over here, this is the 401k. I have the 40,345 there. I'm only matching 6%, but I also dropped $170 in there for a loan that I took against it a while back that I'm still paying. So not much going there. Total balance 401k and private account is $88,568. So pretty much all I got going on there. One thing, actually I forgot to click on it, so let me see if it'll, which I wasn't even expecting this, so where is it? Yeah, right here. Okay, so I'll show you all this. I thought this was pretty cool. Hold on real quick, bear with me. Let me put this stuff back and I'll put this here. So these are some of the recent dividends. I had a couple before this down here, but it was like, I don't know, $8-9. But I thought this was pretty cool. So BBD, I got paid a $324 dividend. So the 20th, so yesterday. I wasn't even expecting that. So I was like, well, that's cool. And I also got a dividend for iTub for almost $20. So there's like almost $350 dividend that I received this month because I had a couple from the 15th. So going back to that loan where I have to, ideally make $1,000 and, $15. Well, obviously a lot of that's going to be made up with this huge Zim dividend that will be getting paid next month for those of y'all that are in on it. So that'll make up a lot of what I needed. So January I still did good on that video. February I missed it, but this one that we're going to be getting April is good, and this is technically March. And with that dividend, that's pretty good. That's like 450, and then we get more. So doing pretty good. The dividends are really actually saving the day with most of this. But I guess I thought that was pretty cool. I got a $324 dividend, and I wasn't even expecting to get it. So that was pretty cool. Just kind of just goes to show, well, okay, you got foreign tax paid too. So BBD, foreign tax. So let's take that out real fast. Fee charge. So I say 323, but it's less. So what do we got that, like 50, 83, still, like $200 extra or whatever. I'll still take it, so I'm still good with that. It's still extra money either way. And then going here, so PBR is where I'm looking to make my next play. It does have a 15%, that you have to pay for the fee or whatnot, and you guys seen in that one before, I had to pay a fee there, so I have to pay fees with this. There's their dividend and the PE ratio and stuff looks good. I do like that it has a $62.56 billion market cap. So it's kind of a good thing there. And then I've been looking, so oil and gas, that thing comes up that all the time. It's kind of annoying. I'm pretty sure we are right down here for Petrobras is where it's at, in the rankings of most of these. And I've looked at ExxonMobil and Chevron and BP and, Shell and all these and stuff like that, Valero. And the PEs there aren't that bad either, but they're not as good as what PBR is. And then you look at the dividends and whatnot. I'm still thinking that I'm gonna go with so you got nice PE, you got a 4.5 dividend yield, but the chart's pretty way up here, and we see that it dips down, so I'd rather buy in around the 40, somewhere in there, whereas PBR's chart, because of the tax, it's way down, but still nice dividend. So that's where I'm gonna go ahead and make my play. I've also looked at the previous dividends. This is NASDAQ, the stuff here. But it's showing the 64 cents, $29, 68, 117, and whatnot. And then I also compared that to this other one that was showing it, and that's going to be paid in May. I'll still look at it some more, but I'm pretty sure this is where I'm going to put the next dividend thing, just to get stuff going in. Yeah, you get charged pretty high on the fees because they're foreign stocks, but I'm thinking, as it was mentioned before, might be able to get some tax write-off on some of that. And then if you look on these, it tells you past earnings, past dividends. So the last dividend, January 26, 2023, was not on the page before, but it had a 64.55 dividend, and so forth. And then they had that one December. But you look at the earnings per share, pretty consistent. They got their estimates, so it seems pretty on. So you could safely say, in my opinion, like you're still looking at like a 50-cent, dividend per share or something of that nature. Would be my guess. It could be even more. You just don't really know. But I still think that's pretty good. Like in a previous video, you can compare Coke. Coke's like 45 cents a dividend and so forth. There's no growth really with this in particular company, as you can see in that chart. But still a really good dividend, considering what Coke was at like 60, something dollars. And you're looking here at PBR being 10, getting a real good dividend for that. Yeah, you got taxes and so forth, but that's That's where I'm looking to make my next play. I'm thinking that's my big focus there. So yep. Okay, this is the other thing I was looking at, the balance sheet and whatnot. So I mean, you got cash equivalents, nice number. So we're going at, that's like current assets, but then you look down at like debts. That's not too bad in comparison. Um, Receivables, I don't really look at certain receivables because that's like things. Non-current assets. Here we go. Intangible assets and stuff. Net property. Okay. But yeah, so I mean, like, when you look at debt and you look at cash, and I'm thinking, all right, not bad. Total current liabilities, total current assets, 31,250, 31,380. But I was actually looking at like Amazon and some other companies and whatnot, and comparing this one to those ones and so forth. I'm thinking like, yeah, it's not really. You got 187 total assets, but there's a lot of stuff that they include there, like they haven't even received on some of it. I think that's how that goes. Total non-current. Okay. But yeah, so y'all check this one out. I'm not gonna go through all of it, but this is my next one that I'm looking to play on. When I get the dividend next month, I'm probably just gonna go ahead and go ahead and come in with a PBR, just because, again, nice dividend and so forth, and it's, even though you have the fees, I'm still feeling pretty good about this company, and I'm just gonna go ahead and go with that and see how it goes. I'll also be able to see the dividend payout, and then also be able to see the fees I will be charged, when the dividend is paid, so that way I can look at what I'm actually getting, right? So, and yeah, so taxes, so yeah, so we'll be able to see how that goes, and I feel pretty good about it. And I did check out Dividend Bull, because I had a comment. Let's see whether if I can find it. Let's see. Well, it's gonna be kind of hard to do, huh? Yeah, but I haven't read these comments yet. The ones that are just here. I was just trying to get a quick video in to show everybody. I don't know if it'll let me scroll down. I did not see. Okay, yeah, so Marky Mark, he commented about checking out Dividend Bull, and I have heard of him before, but I started watching some of his stuff too. He's got a lot of good stuff that he shares on there, and whatnot. So I was like, that's pretty cool. And I'd like to get more into companies that he also does and suggest. That's kind of like some of the ones like AG&C. Is more of a REIT. Medical Properties, more of a REIT. But I do try to go with the ones that have the lower PE ratio still. I still like lower PE ratios. Like Realty Income's a good one, and a lot of the ones that he was showing are good ones, and I was like, yeah, these are really good. But I still try to stick to low PE ratios, because if I'm going to pay a higher premium, I'd like to save that for companies like, when Coke maybe gets a drop, if the markets do something crazy, depending on Wednesday. You never know, it could influence them in a way. I doubt it would influence Coke in a crazy way, but but if I'm going to pay a higher premium, like something that's like in the 20s or something like that with price to earnings, I prefer to go for something like Coca-Cola or maybe McDonald's, or something like that. Just because if I'm going to pay that premium, I want it to be a company that is like, solid, real good. But for certain ones that don't have that huge, great foundation with certain things like that, I kind of just want to stick to low PE ratio so that I'm not paying a super high cost to get into them. But I also try to like look for some pretty solid companies. And PBR, I mean, yeah, I mean the number like the balance sheet's not as great as other things, but I still think that's gonna be a good one. And then with the taxes, yeah, I've looked at the taxes, but you look at the one that I just got, the $300 or something dividend, right? So you take that and then you minus, where did I put that at? You minus the taxes, you're still looking pretty good. So hey Siri, bring up my calculator. So I mean you go, where you at? We just say 324, right? And this was just the dividend that I got from it. So we're minus the 48.59, and then I'll minus the 33. I'll even minus the 04. So I still got 242 extra dollars, for holding that stock, and then I can even come around and minus. What do you got? Like normally it's 10, 12. So we're saying 22%, right? We're just throw that for a tax bracket. Still $189. Why I was in BBD. So that's even one of those things when I took out BBD and took that bit of that loss, right? Which BBD, I don't remember which one that was. One of them was 200 and the other one was 400, right? The big one was BRFS where I took the heavier loss. But so it say this was the $200 one. No, that was 200. I think was ABEV. So we'll go ahead and say this was a $400 one, right? Okay, so we already looked in previous videos what I anticipate to receive by taking the money out of BBD and putting it into Zim after taxes, right? So I'm still looking at making over $1,000 is what I calculated. Okay, well, I didn't even expect to get this dividend. So now instead of having to, count it as a 400 loss, I'm only counting it as nearly like 210 loss. And that's after, 22% taxes and what they just took out right here. So that means I'm going to be getting more of that sacrifice that I did by selling BBD to buy into Zim is going to be more of a profit. So yeah, taxes, they do get high, but, scared money don't make money, in my opinion. So yeah, be safe about things and whatnot. I totally get it and I totally agree with that. But even with certain taxes being high and so forth, you're still, as long as you're making good money with it, you're still doing well. Because you at least want to be in the green. You at least want to be making money. If you're not making money, then, you have a problem. And since some of mine is on a loan, I have to be able to generate a lot to make that loan worth it. Otherwise it's not worth it. Like I can't just take the money from the loan that I did, the $30,000 loan, and then I can't just drop that into like Coca-Cola at, I think like $24 PE it's trading at, get a dividend quarterly, that's 40 cents. That's not going to be enough to cover the loan or the interest or anything. So I have to take more chances, and I don't just have 30,000 lying around. That's why I went ahead and did the loan. That way I can generate more money. And then once this is doing very good where I need it, then I can pay the loan off faster, and then I have more time on my side. So that's another thing. Safer companies, great, but less taxes and stuff, but time's not on your side. You already have to be, doing pretty good with, finances and money readily available to you for that to work very well and help your portfolio grow quickly instead of slowly. So that's why I'm taking a lot of these chances. I guess you can call them chances, but that's why I'm taking on the the expensive tax things, because as long as I'm getting a decent amount for it, it still makes the loan worth it. Once the loan is gone and I don't want to have to worry about the loan anymore, then that gives me more time where I can, work that way because I'm not having to fight against the interest on the loan. But to each their own, and whatnot. And PBR, that's going to be the next one I'm looking into. I can't wait to see what happens tomorrow with that meeting. I'm betting it's going to still be a 0.25% hike, but we shall see. But this is where I'm setting at. Again, like when Zim goes down like it did yesterday, I'm not worried about it. It's coming right back up today. Like, I'm just going to pull it. I'm just curious real quick. Let's see what what Zim is setting at now. Yesterday it went down $1.30, I think. So yeah, we're already back up $1.22. See, like that's no big thing. The support's nice though. But anyway, guys, that's what I'm going to be doing. I'm sticking this out. When we get the dividend, I'm going to be looking at putting it into PBR because I'm like, I'm going for the high dividend yield. And then once I get to a point where I don't have to take as much risk on that, and I don't have to do that, and then I can avoid taxes more. But even with the taxes, still making good money. So that's why I'm deciding to pick these ones to build cash faster. But anyway, see you on the next one. I hope y'all are doing good with your investments. See ya.